Hey everyone, Brayden here coming to you with a breaking Disney news update as Disney's fiscal year 2022 Q3 earnings results have just dropped. And while a lot of fans haven't been feeling the magic lately, Disney just reported a significant earnings beat with an EPS of $1.09 over the expectation of 99 cents. Revenues were up 26% on the quarter, and Disney added 3 million new subs over the expectation, adding a total of 14.4 million subs on their streaming platforms. Pretty incredible stuff, needless to say. I've been pretty negative as far as my outlook on the streaming end of things, really since Disney Plus was announced, because I really don't see how this becomes profitable. And to be fair, it hasn't just yet. Disney saying, oh, in a couple years it will become profitable. Disney Plus is still nowhere near profitability as things currently stand, but they do have the scale here, with today it becoming official that Disney now has more streaming subscribers than Netflix, which is being heralded as a very big deal by the mainstream media. This isn't a good comparison because it's factoring in all of Disney's streaming businesses together, all their services together. It includes subscribers that are paying a couple of dollars a year as part of the service that Disney sells with Disney Plus Hotstar in India. You've also got bundles in there from here in the States, all sorts of things where the sub number doesn't actually correlate with how much money they're making. If you take the subscriber number and you multiply it by the price on the website, how much they theoretically be making per subscriber, that $7.99 a month, Disney's not making anywhere near that currently. For example, here in the United States, if you go and see how much Disney is making on average per month per paid subscriber on Disney Plus, it is $6.27. So some people here in the United States are getting a much better deal. And then if you take a look at how much Disney is making per paid subscriber on Disney Plus Hotstar in India, which makes up 37% of that total Disney Plus subscriber number, Disney is making $1 per paid subscriber per month off of those 58.4 million subs you have with Disney Plus Hotstar, which are factored into the overall Disney Plus subscriber number that the media and Disney and everyone's waving around saying, see, we beat Netflix. And it's really like, no, we're not really there just yet. Taking a look at the parks earnings, what I think most of us were most interested in seeing, Disney Parks experiences and products brought in $7.39 billion in revenue in Q3 22, up 70% year over year. A lot of that, of course, is eaten into by Disney's operating expenses, of course. The parks are infamous for how much they take to run, especially on the labor end, how much it costs Disney to run the parks. The parks income for the quarter was $2.18 billion, an over 100% increase year over year. Now, you're probably saying, okay, Brayden, is this actually a good number? Is Disney actually making good income here? Because $2.18 billion sounds like a lot, but they're comparing it to last year, which was not a nominal year. Of course they're doing great. Of course they're up over 100% year over year. Last year was definitely not a normal year. What about comparing to the most recent Q3 where the parks were operating normally? That, of course, being 2019. Comparing this Q3 result to the Q3 2019 parks results, the parks revenue was $6.57 billion and the income was $1.71 billion. So you can see not only is Disney performing better than they were before the pandemic in both revenues and income, but also you may notice Disney's margins have improved from 26% to over 29%, which is to say Disney is making more off of their guests, converting more revenue into income than they were pre-pandemic. Disney's done a very good job at cutting down on their costs. One of the causes behind this is the cutback on labor costs, where previous Disney jobs, like having a hotel lobby filled with cast members, ordering food from a cast member at a register at a quick service restaurant, those positions were cut down on greatly during the events of 2020, which Disney said was because of distancing. So they'd say, oh, just check in on your phone, order food on the app, things like that. Now we are out of the pandemic, yet those changes remain in place. And you also have new efficiency thanks to that heavily disliked parks reservation system at Walt Disney World, where Disney has been able to hone down on just how much food they need, how much merchandise they need, how many cast members they need to service the guests in each individual park by having a better idea of how many guests are going to be at each park on any given day, further reducing waste at the parks, increasing those operating margins at the expense of the guest who now has to go in and make a reservation, and it causes all sorts of issues at the gates where people show up and they don't have reservations, things of this nature. CFO Christine McCarthy elaborates on this and how attendance is exceeding 2019 levels. Take a listen to this.
Demand at our domestic parks continues to exceed expectations, with attendance on many days tracking ahead of 2019 levels. And our continued focus on improving the guest experience through the use of our reservation system to purposefully manage capacity versus simply increasing volume has the added benefit of improving yield and optimizing overall economics.
So as you can see there, this parks reservation system, it's not going anywhere. Disney clearly loves the parks reservation system. It gives them great data where they're able to increase margins, lower operating expenses. It's the worst, in my opinion. It's anti-consumer. I used to think they would end up dropping it sooner rather than later just because of the guest pushback. Evidently, that is not the case. It really seems like something that is so useful to Disney, they are going to keep it around no matter what. I think this thing is here to stay. There's a famous proverb, nothing is more permanent than a temporary solution. That's the parks reservation system at Walt Disney World. I really don't think it's going anywhere anytime soon. In fact, they'll probably end up strengthening it and making you jump through more hoops, really until they get real pushback where guests say, you know what, I'm not dealing with this. They're just gonna keep doing it because why wouldn't they? They're getting record demand. That's pretty insane. Another notable comment was what Disney said about the per guest spending at the parks, which is up substantially since this time last year, which makes sense. Last year was an odd year, but what might really shock you is how much is up compared to the previous normal quarter in 2019. This is insane. Check this out.
Per capita spending at our domestic parks also remains strong, increasing 10% versus Q3 of fiscal 2021 and over 40% versus fiscal 2019.
So each guest is spending 40% more than they were when they were at Disney in 2019. 40% more. That is absolutely incredible. For all the talk of, Disney's going broke and things like that, part of me wishes that were true. Disney would certainly listen to the fans more if they had no other outlet to make money, but that is clearly not the reality we are living in right now. People are coming in droves and paying 40% more for the same experience, which is just wild, wild stuff. A notable comment during the Q&A portion of the earnings call was when CFO Christine McCarthy was asked about how Disney will keep demand high as pent-up demand starts to wear off here, and she brought up, of all things, loosening up annual passes as a possible strategy to keep the parks growing. Take a listen to this.
As it relates to levers of demand, some of the things we could do, Doug, we had limited the number of annual passes that we have across some of our businesses, some of the parks, and all of those come with the exception of the highest tiered priced annual passes. They all come with some blackout dates. So to the extent to which perhaps you had lightened demand, you could loosen up some of those to bring more people in the park and just enjoy the park and spend money while they're there. And also as it relates to demand, we have not yet seen a demand abate at all, and we still have many days when people cannot get reservations. So we're still seeing demand in excess of the reservations that we are making available for our guests.
Some interesting AP talk there. We'll see if we end up seeing the annual passes open up again, or maybe they'll change the current tiers. She was really talking about how they might loosen up the blockout dates on the current tiers, which is interesting. On the parks reservation comments, Chapek, McCarthy, we get it. The parks reservations are helping you with the efficiency of the operation. They're limiting certain parks on certain days, especially for day ticket holders, in order to get them to go to the less in-demand parks, spread out the demand across all 4 parks here at Walt Disney World. The idea that the reservation system is meaningfully limiting crowds at the parks, that is not true. That does not bear out at all in the stuff that we're seeing from the parks, the day-to-day. We know why it's there. It's because it's good for you. It's good for your margins. That's why you're doing it. It's not about the guest experience. The Magic Kingdom lately has been absolutely packed. There's been a lot of people complaining about it, a lot of people speaking up about how busy the parks are. They are not limiting capacity to a significant extent at any of these parks. The CFO claims on many, many days the parks are completely booked up. Here's a screenshot of the current availability on the pass holder bucket. My anecdotal evidence doesn't line up with how the system is being characterized to shareholders. You look at the regular ticket calendar though, and you can kind of see a little bit of what she's talking about where there are some blockouts. But if you actually look closely at these dates where it seems like there are blockouts, it's a single park or at most 2 on a handful of days, and they kind of switch around. Basically, Disney's doing that. They're trying to get people to go to the open parks. They're trying to push people around, get them to go to the less in-demand parks to spread people out between the parks so that they have a more efficient operation, make more money, things like this. Disney is not turning people away because they have a huge excess of demand. That's just ridiculous. And even if that were true, I actually think that would be extremely bearish in the long term for the company. They seem to be bragging that they have more demand than they know what to do with at the parks. If that's actually true, why isn't the infrastructure built out properly at your parks where you can capitalize on all of the demand? Maybe you should add capacity to the parks, build new things, build new rides, new lands, new parks, new resorts, just an idea. It's like if Costco had one store and they bragged about how busy it was and how they turned tons of people away, but also said, we refuse to build any more stores. We're only gonna have one Costco. Well, how are they going to make more money over time if they only have one store? Well, they can raise prices on what's inside their one store, which is what we've seen Disney do time and time again. Today we heard 50% of guests coming through the gates at Walt Disney World are buying at least one Genie upcharge, which is pretty insane, but it becomes diminishing returns. You can only do the increased guest revenues thing so much before you just start to get to a point where everything's too expensive. And what ends up happening is guests will still go. You know, there's plenty of guests, Disney's seeing lots of demand, but they'll start rationing what they'll end up spending money on. So it's actually not really good for Disney above a certain point, and that's why they've been changing up their strategy by reducing portion sizes on food instead of just increasing the prices on food, things like that. Disney's starting to run into some resistance there. Like I was saying with the Costco analogy, you know, if they don't build more stores, if Disney doesn't add more infrastructure, things that increase capacity, where is the long-term growth going to come from? Is it going to come from gimmicks like rose gold this and Genie that? No, that's just short-term stuff. That's not going to work in the long term. And in this earnings call, the executives were talking about the long term, saying they're very optimistic about the long term. But after Tron here, we have a long winter ahead thanks to the lack of capital investment in the parks the last few years. And it's not like Disney just wasn't investing during that time. They simply decided to put it into studios projects. You could argue that the parks were closed or they were under reduced capacity and Disney had no idea that they were going to get back to where they are now. I think that's ridiculous. I think Disney knew that they were going to return to what they were before. Why wouldn't they? The parks have always done good in times that are even bad for the economy, recessions, things like this. The parks perform well in most situations. They are quite versatile. They are a sure bet to put money into them. You are going to get attendance spikes. You are going to get more people going to your parks if you add new things. This is just a fact. So what happened is Disney simply decided that they're going to put more money into studios projects. They're trying to get this Disney Plus thing to work. You look at a lot of these studios projects that Disney put all that money into during the last 2 years, and now they're coming out and they're posting disappointing returns. They're not performing that great at the box office. And in the case of the streaming service, it isn't even turning a profit. And here we have record-breaking profits for Q3 at the Disney parks. And what do the parks get out of that? Where is all that money that they're making, all that cash that they're generating? Where is it going? Is it going into new rides to increase capacity? Is it going into fixing old rides at the existing parks that are in desperate need of help? Or is it mostly going into other things that have nothing to do with the parks, and the small bit that does go into reinvestment at the parks is going towards doing an overlay to an already popular high capacity ride, which will reduce capacity at parks on both coasts for at least a year or something like that. And after that, after it's down for a year, you know, when they reopen, when we have Princess and the Frog, once that opens, we're gonna be back to the current capacity we already have at the Magic Kingdom and at Disneyland Park. Just something to think about. I'm definitely a proponent for new stuff. They really got to get some new stuff going here because it takes a while to develop this stuff. And I believe that there are executives with a say inside this company who agree with what I'm saying. I've heard they do from our sources I very much trust. When do we start to see that turnaround in investment at the parks? Maybe with such great numbers here and last quarter as well, we finally start to see some real announcements. Disney really put their money where their mouth is at the D23 Expo Parks panel, which will happen next month. I've had this contrary take for months now where I've been saying CEO Bob Chapek, someone not many of the parks fans like, may be all for increasing investment at the parks because very much unlike what they're seeing at the studios, the parks are bringing in consistent higher highs and further investments there are sure to bring return almost guaranteed. Whereas at the studios, when you invest a lot of money in one of these Pixar films, there's a chance it does very well and it's a hit and it makes more money, it has better margins that you never see with the parks, or it could end up not making much money at all and end up being a loss. We've heard rumors the executives were not very impressed with what they saw in Disneyland Paris with the new Marvel themed area. This would be bullish. This is great news for fans if this is actually true, because that would be some indication that some of these execs out here are pushing to put money into what's actually working, and that is the parks. And Walt Disney World's got some increased competition ahead from Epic Universe, Universal's new park, which is opening in 2025. Needless to say, a huge day for the Walt Disney Disney company. The stock is up 7% after hours as we speak, after an already green day on the stock. Disney's stock performance has been quite rocky this year, so it'll be interesting to see if it can hold this 120 level it's currently sitting at on low volume after hours trading when the market opens back up tomorrow, and the day after that, and the day after that, and next week and next month. Whatever happens there, we'll be sure to cover any new developments as we get them. So be sure to subscribe with those notifications on so you don't miss a beat as we wait to see what happens here. I hope you guys enjoyed. From the Mickey Views Magic Studio, this is Brayden. Have a magical day.